Hello everyone, Dividend Enjoyer here, and today I'm going to be doing a stock analysis video of Energy Transfer, ticker symbol ET. Before I get started with the video, I want to highlight a nice comment I received from user KGAN Yaramnamain 5202. He said, "Love your videos." I probably butchered the name, but I really appreciate you leaving comments, and everyone else who leaves comments, thank you so much. I've already made an Energy Transfer video on my channel, and it's one of the most successful videos on my channel. There are two reasons I wanted to kind of make an updated one, and the first reason is I think that I can do better this time around. I think I've gotten better at making videos because that was the third video I ever made on my channel, and they have new earnings, so the actual updated value will be different. I did all the stuff with the DCF, pushed it out, but before we get into any of that type of stuff, I want to say personally, I have a significant holding in this stock. For my Webull account, I've already up $5,885 in it, and for my Chase account, I'm up about $20 in Energy Transfer, and I make $479.84 a year just off of the dividend income from Energy Transfer. So I'm going to be a little bit biased because I think it's a really good company, and I kind of want to highlight the valuation and the business model and why I think it's still probably a good investment, and why I think I'm going to be adding more shares to my Energy Transfer position over time, just because I think that it's still undervalued and it's a really good solid play to be investing into. Currently, Energy Transfer is up 36.54% in the past year. It has a market cap of $68.44 billion, a price to earnings ratio of 15.56, and an annual dividend yield of 6.5%. The 52-week low is $14.09, and the 52-week high is $21.45. Overall, analysts are very bullish on the stock. Currently, 15 out of the 17 analysts covering Energy Transfer either issued a buy rating or a strong buy rating, and the analyst price targets range anywhere from $20 to $25, with an average price target of 22.67, which represents a pretty significant gain in 1 year's time when you also factor in the dividend from the current price of $19.99. I also want to say that I think Energy Transfer is probably going to be an even better buy into the future because the demand for energy is just going to continue to improve over time with higher demand for AI training and just already existing infrastructure. And if you don't know, Energy Transfer is a company that owns the pipeline infrastructure, kind of move natural gas across the United States, and they receive a dividend for that. Energy Transfer, I've been holding since 2021. I think that now it's even a better buy with new energy demand, and I also want to say that the business is very good because it's very consistent. It's almost monopolistic in the way that you own the certain strips of pipelines that you operate in. Nobody's going to come and dig up your pipes and replace them, so they have very stable cash flows, and the actual pipelines in the ground are very inflation proof if you think about it. This is the same reason you would want to own something with a lot of initial costs to get started, like for example another energy company or a railroad. It's going to cost you a lot of money initially to put down the actual railways or put down the antennas or whatever you're doing for electrical, but once you have the pipelines in this case in the ground, your cost is already pretty much expended, and whatever amount that you paid to put those pipes in the ground is the amount that it costs you, and it's not going to change with inflation. So that's another thing to love about this company. I also want to say that the dividend history has been kind of skewed because in the past they've actually had to suspend the dividend during COVID because the amount of energy demand was a lot lower. So the big risk in owning this stock is that energy demand could be lower. But I also think that there's a lot of other surprise factors that could make up and make even more energy demand into the future. That includes things like the actual grid for electrical cars. I know that seems kind of counterintuitive, but there is going to be a lot of natural gas when building anything, and in the long term, I think that energy demand is just going to continue to increase, and Energy Transfer is in the perfect position to be able to capitalize on that. And you can kind of see that in the past performance of the stock that I talked about earlier, being up 36.54%, and I think it was up even more the prior year. I can double check on that, but this stock is still, in my opinion, an under the radar, very good, highly sustainable, high dividend yield stock that I think that would be a great addition to anyone's portfolio. Here I have my DCF model for Energy Transfer, and the equity cost is going to be 8.719%. This is based off of the current 10-year treasury rate of 4.472%, the beta of the stock at 1.68, and the average market return of 7%. And the cost of debt is 4.768%, and I've computed this by finding the interest expense, total debt, and the income tax expense, and the income before tax so that we could get their effective tax rate and their overall cost of debt. Next, what I did is take each of their weightings. So Energy Transfer is 46.89% debt weighted, and the market cap is 53.11% of the total value of the company. And by multiplying each of these weightings by the cost of each, we have a weighted average cost of capital of 6.87%, which is to be expected because it's almost a 50-50 split between the two. And you could kind of see that with the cost of debt being 4.7 and the cost of equity being 8.7. A number kind of in the middle, but more skewed toward equity would be 6.87%. Now, moving on to the actual model, we can see that the average revenue growth for Energy Transfer is 8.65%. The average free cash flow growth rate is negative 1.48%. This is because 2021 to 2022 was a real outlier. I think that there was a real kick up in natural gas demand and the prices kind of rose in 2021. So you will have kind of anomaly sort of years, but this is also a really strong company when oil prices are high because they're able to charge a higher toll to actually move the natural gas for their consumers. What's really interesting about this company and what I was not expecting is that when I computed a 0% growth rate in the free cash flows, the stock is still considered a buy with 11.49% upside, which I've actually never seen in modeling for a company, especially when you consider that they are probably going to be able to grow the free cash flow because they're going to be using some of their retained earnings to either add more pipeline infrastructure or add more ways to grow shareholder value. And they've consistently been able to grow the revenue over time. I mean, obviously, again, you do have outlier years, like 2022 was a huge year for revenue. The trailing 12-month number is better than 2023. So I would expect that generally the trend would be that the revenue would increase over time, which only makes sense because there's going to be more demand for energy in the future. I mean, I just think it's an inevitability, and I think that it would be very smart to have a position in energy, whether that's Energy Transfer or a traditional ExxonMobil type of company or Sunoco or something like that. But Energy Transfer is very poised to meet the energy demand and to be able to make a lot of money from that. So I think that it's insane that this stock is so undervalued compared to the potential increases in free cash flow and the potential sustainability of such a high dividend. For this stock, personally, what I do is I just collect my dividend, and I don't think about this stock a lot. It's been the best stock I've ever held because it's been the only one that I've held for a significant period of time, and I've been able to just cash in pretty consistently. I don't really look at the price, and the only thing I really want this stock to do personally is go lower so that I can buy more. Now, if we put a 3% increase of the free cash flow over the next 9 years on average, we can see that the average value per share would be $32.23 right now, which represents a 61.22% upside in the current price. So I think that this stock is actually probably the best stock that I could be adding to my portfolio right now. It's really interesting to me that there isn't as much coverage on this type of a stock when the dividend is very good, so that's very good for retirees or just everyone, right? And the stock is set up in a sector that's going to benefit greatly from AI. I don't think that people are thinking necessarily enough about the premium that should be put on these energy types of companies that are going to fuel the future of the AI market. And they're already making a lot of money without AI in the next level that it's going to be at. And you can see that reflected in the revenues, reflected in the free cash flow. And it's just very interesting to me that the stock really hasn't caught up to what would be necessarily a fair value. I mean, even if we put a negative 1% for the next 9 years on average, if they shrunk their cash flow by negative 1%, it would only represent a downside upside of 2.8% of the current value. And that's if the free cash flow is decreasing on average. That's not even having some years where it's extremely higher. And it doesn't make sense that the free cash flow would decrease if energy demand is going to increase and if you're going to have periods of time where oil prices rise. And you can make the argument that there will be periods of time where oil prices also crash, but I think that with the tariffs and everything going on in the world, it's more likely that we're going to have less stability going forward, and we're also going to have higher oil prices. I mean, that just makes sense to me, especially if demand is going to increase with this new AI race. So my thesis on Energy Transfer is that I think I want to actually add even more to my portfolio. And it's very interesting to me because the Webull amount that I showed earlier in the video was actually money that I had basically put 5 grand in, around that, right? And once the stock was worth around 10 grand, I sold out half of it. And that's basically free money that earns me over $100 4 times a year. And what I did when I was making my Chase account is I said I want a little bit of a mixture of different companies for different reasons, which I have broken down in a couple of videos about my specific portfolio. And Energy Transfer was just a no-brainer because it's a very high dividend. It's growing pretty consistently. The stock is just very defensive. So even in a time of recession, they're still going to do very well, and they're still going to be able to pay that dividend. And I think that management has learned to be more conservative in general from the COVID years, because they were in a really bad position back then. And you can even check the chart from back then. The stock price was around $5 or $6, which would have been an amazing buy now when you consider the fact that you're getting around $1 a year per dividend. That was when, it was also a weird environment because the demand for oil shrunk pretty significantly. I believe oil prices were negative at one point, which is unheard of, right? So it was like a nightmare scenario where there was just overall less of a demand for natural gas, and they have significant debt that you've seen on the balance sheet. So I don't think that we're going to see another situation like that in the near future or even in the long-term horizon. I think that Energy Transfer is going to continue to make a lot of money, and I think that this is a very smart investment to get into if you want a very high yield that continues to increase and a stock that you don't really have to think too much about into the future once you do the initial research. With that being said, I'm not a financial advisor. This obviously is not financial advice, but I really appreciate everyone who's come here and supported the channel and everything like that. If you guys think that Energy Transfer is a buy, if it's a sell, if it's a hold, or just what your opinions are on Energy Transfer or a different stock analysis video you want me to do, leave it down in the comment section down below. Please hit the subscribe button if you want more stock analysis videos like this one, or if you want to see my full stock portfolio, you can also click that playlist that's going to be at the end of this video. Thank you guys so much for making this far. Bye.